The RCF issue will also open. Government of India, they plan to mobilize about 300 crore plus from this issue. So what is in there for a retail investor when it comes to RCF OFS? Let's discuss that with Dipen Seth, Head of Institutional Research with HDFC Securities. Dipen, good morning. Thank you for joining us. What is your first take on the RCF OFS?
Well, good morning. First of all, I'm not here to advise retail investors. I head institutional research for my firm, but that said, an investor is an investor. So I think there are two aspects, two ways to look at this divestment. One is, how does it figure in the overall story of divestment? And I think raising about 300 crores at the margin is not a big deal in the overall arithmetic when you are wanting to raise 30,000 or maybe 50,000 crores in a year. So that is as far as the government's perspective is concerned. Now, insofar as investors are concerned, I think there's a little bit of an opportunity here for some value picking or nibbling. Urea businesses are not great businesses with great franchise or something, but here is a business which is earning about 11-12% ROE, available at one-time book. They've done some debottlenecking at their Thal plant recently for expansion of capacity by 0.25 million tons. They've done a little bit of energy saving. So we are expecting to see these boosts in profitability play out over the next year. Then RCF has also made its plans clear to set up a brand new or a brownfield expansion, quite frankly, at Thal again, for some 4,500 crores, which will largely be funded out of internal accruals. So this is probably a very good time to get into this business, 10x or less, I think, on current year's earnings, 8.5x next year, available at price to book of 1. ROE is likely to go up from 10-11% to maybe 12-13% over the next 2 years. Very good value pick, I would say. Not interesting from a government or disinvestment perspective, but yes, for the mid-cap fund managers out there, I think time they took a serious look.
Dipen, not quite sure if you can comment on the pricing, but does it seem like a lucrative pricing to garner as much interest as some of the other government paper has seen in the past? And more importantly, do you think stories like RCF are for the long-haul investors? You put in money right now and then, perhaps take a relook only for the long term?
So I don't know how big is the opportunity in any case. You have a float of less than 300 crores today, which will probably increase to about 500, 600 crores or something at best. So I don't know how many large mutual funds can actually participate or how many large FIIs can participate in that kind of size of opportunity. But there is absolute value on the table here. And without getting into the big picture of how many people can participate, I think the bargain ratios or the multiples are attractive enough. Like I said, it's not a great business. So you're buying it around book. ROEs will go up by a couple of 100 bips over the next 2 years. You have to wait patiently for the, currently created opportunities or currently created capacities to play out. And then the new capacity will be the next driver for the stock. So that's how I see it.
If I look at the existing shareholding pattern of RCF, 92% is currently held by Government of India. Institutional investors don't own a single share. That's according to the latest Bloomberg data. Do you think institutional investors could give this one a skip?
Frankly, a lot of institutional investors will give this one a skip, and some of the guys who think they can kind of be ahead of the curve will probably want to participate, and it's a function of how the overall system behaves towards the stock. If we see a little bit of participation, then we'll see a little more participation coming in later. So I'd say yes, there is an opportunity out there, and you don't have to wait for everybody else to get interested. There is, like I said, there's absolute value. So the guys who will participate today will probably be doing it with the perspective of being early players in the game.
In general, which is the best fertilizer stroke urea stock to own?
Well, there is Chambal, which has got a capital allocation issue because they have a couple of other businesses where people don't understand what's happening. So I'm not so sure about that one. And I think on urea, actually RCF is pretty much close to being a pure play. It has a complex fertilizer business and a little bit of a chemicals business, but if it's actually going to set up another 1.5 million ton plant, then this is pretty much a very decent option. And remember that urea is actually a utility kind of business. You get regulated returns. So of course there is Zuari and then there are other players, but I think RCF is good enough to consider very seriously today.
RCF also owns a lot of land in Mumbai. Do you expect them to monetize that?
Yeah, so this is one part where things are not so clear. There's 700 acres or so of land, correct me if I'm wrong here, and we get excited over the 50 odd acres that, let's say, a Century Textiles owns, and there's 700 acres of land in Chembur in Bombay with this company. But I don't know whether much of the upsides from this land will be shared with minority shareholders. So I don't know what the government's mind is on this one. And I don't think we should factor that into any consideration around this talk, though things can dramatically change if some visibility around this aspect was to be created.
Typically, I've always seen that fertilizer companies, they often, they often reward shareholders with a strong dividend payout. Do you expect RCF now going forward could increase the dividend payout ratio?
I doubt it, because if you're setting up 4,500 crores of fresh capex, and then I think you're going to conserve your 3,500 crores of annual cash generation for the equity component there. Else you would, want to come and dilute, which I don't think is a possibility. So I would actually bet on a lowering of dividend payout on this one. And quite frankly, it's a capital appreciation story that one would play for, not a dividend yield at this point of time.
Best case scenario for RCF, let's say next 2 years, the next 3 years.
Earnings at, let's say 2 years out, earnings going up to something like 6 odd rupees. I think my earnings estimate for F14 is closer to about 5.3 or so. There could be a little bit of a downside risk there, but because of the drag in the complex fertilizer market. But I think people are going to notice that it's just a matter of time before earnings pick up again. And I would say F15, we haven't penned down the numbers, but I think 6 rupees is easily achievable. So like I said, the bargain ratio is pretty attractive here.